So our project, located in northwestern Ontario, it's about 40 kilometers northeast of Thunder Bay. So it's a drive, no camp required in the future. We like to say we're a rare primary platinum asset, and platinum does make up the largest portion of our future potential revenue. Out of all this stuff I'm talking about, this is the most exciting to me because it does, one, it proves what we were trying to do in terms of targeting works, and secondly, opens up that entire 2.5 kilometers to potential.
Hello everyone, and welcome to Clean Air Meadows inaugural 6 event. Today we are joined by Mike Garbutt, President and CEO. I'll first pass over the reins to Mike for a brief presentation, then we can open it up to a Q&A session. So if you have any questions, please submit them in the chat box, which can be found in the bottom right corner of your screen. Time permitting, we will try and address all of your questions. And as always, this event is being recorded and will be made available for review on our platform and YouTube channel shortly after we conclude. With that said, Mike, thank you for taking the time out of your day for this. The floor is yours.
Thanks, Kyle. And thanks everybody for joining me for the discussion about the Thunder Bay North project, and hopefully I can give you a reasonable introduction with some level of detail. I will be making some forward-looking statements. They do contain some known and unknown risks, so please be aware of that as I go through this presentation. I always like to start off the presentations with we'll call it a land acknowledgement, but I like to talk about the relationships with the First Nation communities. So the project is encompassed by the lands of the Roberts and Superior Treaty of 1850 and includes the territories of Kiashkis-Ziging Anishinaabe, Binjitawabig-Ziging Anishinaabe, Red Rock Indian Band, and Fort William First Nation. So together, those communities, we work with those communities. And in fact, enjoy some personal relationship. And, I find the members of the community and the leadership, they work with integrity. They're really excited about seeing this project go forward, and they're very supportive, and they really want to participate in what we're trying to do. So we're very fortunate to have them as partners. So our project, located in northwestern Ontario, it's about 40 kilometers northeast of Thunder Bay. So it's a drive, no camp required in the future. We are also about 65 kilometers south of Impala Canada's Lac des Îles mine, which has a 12,500 ton a day mill. Our 300 square kilometer land package, also the 527 highway runs through the western part of our land package, and the 230 kV east-west transmission line runs through the southeast portion of our claims. Both of them were about 7 kilometers from each of those, so we're sandwiched in a bit of infrastructure there. And within our land claim, we do have 5 magmatic intrusions, 2 of which comprise our Thunder Bay North project, namely the escape deposit and the current deposit. So this shows our updated resource that we put out with the PEA late last year. As I mentioned, the project is made up of the current deposit and the escape deposit. Both of them are magmatic intrusions that were part of the Mid-Continent Rift event about 1.1 billion years ago. The current deposit, 8.9 million indicated. You could see the grades there, decent platinum palladium grades, copper and nickel as well. We also have payable amounts of gold and silver. And the escape deposit, 6 million tons indicated. Again, similar grades. Generally, the escape deposit has higher copper tenor. As you can see, it's almost 0.5% copper. Both are open down plunge, and I will talk to the down plunge opportunities at escape. And in addition to the indicated resource, we also have 2.4 million tons of inferred resource that occurs in the lower part of current here and kind of in the upper part of escape are the 2 major areas for inferred resource, lower grades. But all together, they make up the entire resource, and putting some dollars to it, it's about a 2.3 million platinum equivalent ounce resource. So it's in itself great resource, but it also has some upside potential that I will talk about within this presentation. So we like to say we're a rare primary platinum asset, and platinum does make up the largest portion of our future potential revenue. But I want to share a bit about the platinum market, because PGs in general are misunderstood. And if you go to any bank and look for long-term pricing, no one really pays attention. So there's very few that actually pay attention to PGEs. And I won't get into the significant detail, but essentially on the supply side, it's driven by mining and recycling. Mining, 70% of platinum is produced in South Africa, and some of these operations are primary platinum, but they have been undercapitalized. The mineralization is changing from platinum rich to palladium rich in a lot of these assets. So the forecast is a general decrease in primary supply. And then you can understand, as a catalyst, a lot of the use of platinum historically and palladium has been as a catalyst for exhaust. But so there's a lot of buildup that's driving a lot of the recycling. But right now we're at a 15-year low in terms of recycling of PGMs. There's a drop in scrap availability. A lot of it has to do with logistics, but the increasing refining costs are causing some challenges. So the supply side is struggling. Now on the demand side, and people have followed, and I'll show you the price graphs. The big drivers, certainly plug-in electric vehicles and hybrids will win the future, I believe, of electric vehicles. A large portion of the current use is in internal combustion engines, or ICE. But we see the future for both platinum and palladium. There's higher loading of platinum and palladium in an equivalent plug-in hybrid vehicle than there is in a combustion engine. So really just got to look at future car sales. Are they coming back to pre-pandemic levels? That's going to drive a lot of the demand. And globally, there's an increase in emissions. Now on the investment side, increased investment. Platinum is a store of value, particularly in Asia. It's garnering more interest on some of the exchanges in China. We can't forget about geopolitical protectionism, and the changes that governments view in protecting their metal content is driving up the price of platinum in particular. Now on the right hand side, there's other uses and future uses. Certainly, we've talked as a company, we've talked a lot about hydrogen. Green hydrogen, so it's used in production of hydrogen and the use of hydrogen. Big time use in Asia in jewelry. It's starting to become an alternative to gold because of the price of gold. It has tremendous industrial use in chemical production and also in glass production. So, it is a precious metal, but its utility is well beyond its value with respect to being a precious metal. Now, our company, we talk about metals for global decarbonization. We do have a significant amount of copper. I'm not going to go into the detail about the copper market, but everyone that pays even a little bit of attention knows it's key to the energy transition and global electrification and grid expansion. And the future is only bright for copper. Right now, there's a refined copper shortage in 2026, and it's forecasted to grow, as demand goes from 27 million tons to 33 over the next decade. So really good future for copper. And palladium doesn't get a whole lot of love. It's seen some great price appreciation, but it's getting pulled along with platinum. Again, its big use is in the internal combustion engine, but higher loadings in plug-in hybrids and those plug-in hybrids, we're seeing 40% growth year on year, and long term, the forecast is 6% compound annual growth for plug-in hybrid vehicles. And then on the supply side, we're pretty sure most of the stuff from Russia is getting through in spite of sanctions, and then 35% is a supply from South Africa. But a lot of these operations chronically undercapitalized, with the prices over the last few years. May take a while to get back on stream. So, and recycling supply, same thing as I covered with platinum. Underinvestment is really challenging the investment. And then if you've been paying attention since January 1st to January 25, 26, we've seen 156% increase in platinum, and a lot of that has been in the last, it's been pretty steady since June, but recently seen some spikes. Copper over 50% increase now from $4 to $6, and then palladium over 100% increase from a low 900 to almost 1800 now. So we call it performance meeting fundamentals. We've been talking about the fundamentals for platinum and palladium for a while now, and it's finally nice to see them coming around. And similarly to gold, I feel some people get frustrated. Not every gold company's equities match the spike in price. Sometimes the equities followed later, and we're still seeing a bit of that. So at our asset, as I mentioned, primarily platinum, palladium, it makes up 60% of the value if we look at the payable recoverable basis on our PEA, but copper is actually 1/3 of it. Copper makes a significant difference. Nickel is around 8%, gold around 3%. And so, that makes up the 6 payable metals. We have done pre-feasibility level metallurgical testing back in 2022, 2023 that supports these numbers. Also, towards the end of last year, we did put out a PEA, and the PEA did envision a toll milling option whereby we keep the infrastructure quite small, Spartan at the site, and ship the material to a toll milling facility. So on the left-hand side, you see the metrics here. So it's study pricing, which we had about 1400 platinum, 1200, 1225 palladium. Strong economics on $90 million capital price tag. We have 158 million post-tax NPV with and sorry, that number's wrong. It's a 32% IRR, and pre-tax over 200 million. Operating cost around $100 a ton, and the all-in sustaining cost around $700 an ounce, right, for combined platinum palladium. But if you use spot prices, the numbers are a little more shocking. We're close to 500 million post-tax and 84% IRR. So with the suite of metals here and the recent price appreciation, this is a great project. And looking at the project itself and the design of it, the 2 deposits are fairly close to surface, so it is a ramp access. Open pit doesn't work. It's too much of a strip ratio because of the tube-like nature, and I'll show you a picture of how the deposit works. The stripping ratio doesn't make a whole lot of sense. So, but this deposit, it's a ramp access, but fairly large bulk mining opening, and the plan is to access the current zone and then continue a ramp shown at the bottom here to the escape deposit. So production rate 2,500 tons a day, all bulk open stoping. Our mining grades, if you compare them to our resource grades, we look for high margin areas. So we mine the average grade 3.2 grams per ton, 0.4 copper, 0.25, and again, payable gold and silver. And again, with the toll milling option, we want to get that grade up because all the material will be trucked off the site. But the key of this is low risk, small footprint, reduced permitting requirements. And I will talk about the standalone mill option later on in this presentation. But that's the crux of the PEA, exceptional economics, and particularly in the current price environment. And I'm talking first about project development here, and I'm notwithstanding we do have exploration upside, but our push is to move this project forward in a meaningful way on a project development stage. So looking at baseline environmental work and permitting, we're in pretty good shape. We continue to collect baseline environmental data. We do monitoring at the site. We did a permitting roadmap a couple of years ago to look at what it would look like to move this project forward. We don't see any fisheries offsets anticipated. There's no overprinting of water bodies. There's no significant species at risk. So we don't see an impact assessment for this site. We'll have some, a small EAs. We got to do a power line. We got to do the road. So those will be one-off assessments. So relatively simple assessment and permitting is what we were told by the consultants we used. We have put in an application for advanced exploration designation, and later on this year we will do a closure plan for that. But essentially what that'll allow is the development of a ramp to the current deposit and potentially taking a bulk sample. And the critical part of that is the ramp is actually, if you're moving this project fast, the ramp is on the critical path. So what it allows you to do, if you have the advanced exploration permit, is to develop the ramp while you're permitting for the operation. And so it cuts 6 months to a year off the project timeline. So that's the project development side. I'll talk to you a bit about what we see on the exploration side and the assets. So some of that have been following us will know in 2024 and early 2025, we did some drilling at the current deposit, the upper part of the current, to expand these, what we call these high-grade ballrooms. So a lot of these, if you're looking at the screen, the yellow portions are all mineralized, all above cutoff grades, good mineralized material. But we're talking about the really high-grade ballrooms, and the picture below is a simplified picture of the intrusion, which is, as in some cases it's a bit of a tube, but you got these embayments where sulfides sit. And if you look at the picture on the left, that shows an example of some of the massive sulfides that this deposit does carry, albeit it's probably about 5% of the deposit. We're working at we have worked at trying to expand these ballrooms, and we're quite successful. I think in some cases we expand them by 50%. So the modeling had a ballroom or had a good hit, one single hole, and nothing followed up around it, and so you had it very much constrained. So we drilled a little closer and expanded these ballrooms, and it doesn't add a whole lot of volume to the resource, but what it does is add grade. And so we've pulled in a bit of grade over that drill program. And then the second one, when I mentioned about scale, we started looking at the escape down plunge. When I joined in 2022, this was on our radar, but not necessarily a priority. So what we've done, there was a magnetic anomaly, 2.5 kilometers magnetic anomaly. Our VP of Exploration, Lionel Jean, came in. We did some passive seismic survey and reprocessed some MT data and came up with some pretty reasonable targets here that we were excited about. And they seemed to follow the right direction of where we thought the intrusion was. So you can see on the plan view, this orange part is what the known escape indicated resource area, and then we have this long 2.5 kilometer untested anomaly, and we generated these 3 targets. So looking at a section of that, again, you could see the scale. We have the escaped conduit is about 3 kilometers, and the main part of this escape high grade zone, that's 3 million tons of over 3 grams per ton platinum palladium and 1% copper nickel. So it's an area of great value. We have these 3 targets shown here, and what we did late summer, early fall, we decided to test and do some downhole geophysics. And on the one hole we did drill, we intersected 50 meters of mineralization. Out of all this stuff I'm talking about, this is the most exciting to me because it does, one, it proves what we were trying to do in terms of targeting works, and secondly, opens up that escape, that entire 2.5 kilometers to potential. So we had that successful step out, and now we could start to get some excitement about even more potential scale. So you compare 3 kilometers that carries 6 million tons of indicated, you extrapolate that, there's a lot of potential here on that down plunge target. So the path forward for our project, for the Thunder Bay North project. So on project development activities, and I may have talked about some of these, but what we want to do is do a little more due diligence on a toll milling option. So when we looked at toll milling, we had some metallurgical projections based on our current met testing. What we want to do is take some circuits of potential toll milling targets and do testing. So we've applied for the Critical Minerals Innovation Fund funding to help us out with that. We should hear about it any time. And we want to evaluate pre-concentration. So anytime you're doing toll milling, what you'd like to do is eliminate as much waste as you can and leave it at site. Some ore sorting pre-concentration could help with that. So we'd like to do that testing. We do want to rapidly advance a technical study for a standalone mill option. And what that would allow Clean Air Metals, we could be the regional processor for PGE feed, because Northwestern Ontario is a fertile area for copper, nickel, PGE assets, and there's a few even on this on Highway 527 that we could look at. So we want to advance that technical study as quickly as possible. We're going to continue permitting efforts, and as I mentioned, for advanced exploration, get the closure planning done. We are going to start early design work for access road and power infrastructure, and we've engaged our First Nation communities for input in terms of the path, the location of the road, the location of the power line, and that's just a starting point in our minds about the collaboration and meaningful participation in the project development by the local community. So we're excited about that. And then on the exploration phase, I did talk about the escape down plunge. We have a program planned. We're going to do a little more detailed MT geophysics to improve upon the targets we do have. And then we have a 2,500 meter drill program covering, parts of that 2.5 kilometer strike. And so really trying to prove up a little more of that scale. And then of the second priority, we do have additional ballroom structures at current that we could follow up on, and maybe potentially few at escape. The two intrusions are sister intrusions. They behave very similarly. So there's always that chance we could expand ballrooms at escape. Really quickly, the 24-month outlook for the project, and I won't get into it in too much detail, but the darker blue is really around advanced exploration and some of the work we want to do in 2026. Ultimately culminating, we believe, in the designation and having permits in hands in the first half 2027, if all goes well. And then the lighter blue, that's more the project development. We're going to do, as I mentioned, the MET testing and the technical study. When we're going on parallel paths here, we're going to develop this toll milling option and see how far we could take it, and maybe we can get to a definitive toll milling agreement. But alternatively, we're going to do a technical study for standalone mill options and some of the infrastructure, and in the end, looking to make a decision on the path in 2027, and then continue on with detailed design and permitting of that selected option. So that gives you an outlook of where we think we are, where we think the project will be over the next year and a half. We do have a small team. So there's myself, Dr. Lionel John, he's our Vice President of Exploration, been with the team since early 2024. Lots of experience in the region. Was part of Lac des Îles, that's up the road from us. He was the exploration manager there. He's kind of an expert in Mid-Continent Rift PGE assets, and has been vital in terms of the success we've had in 2025. And then Chris Tootle as our VP of Sustainability and Community Relations. Extremely great experience in permitting, but also has some great relationships with communities and a very, very proactive and forward thinker. And then Jim Gallagher, again, lots of experience in the region, former CEO of North American Palladium that owned Lac des Îles before it was sold to Impala Platinum, provides a lot of direction to us. So we have a small team, but we're a team of doers. We don't use a whole lot of consultants. In terms of our capital structure, we have 250 million shares outstanding. We're trading, fluctuating between 10.5 cents. So, market cap around 26 million. We have 1.1 million in cash, and we're heavy retail. We back in 2020, when I joined, we had a lot more institutional investors, but the palladium price kind of tanked on us, and we ended up with a lot more retail. So part of what we're trying to do is build that back. I've talked in other presentations about looking at strategic investment and our JV partners, those sort of things. So we're always on the lookout for that. That will certainly could help with our capital structure. And so the investment summary here, investment case for Clean Air Metals, the PEA, strong PEA, and the financial support, a hard push towards project development. And as I mentioned, we're going to look to do that next phase of study. Our resource, you put up some of the intersections we've had in the last 2 years up against any copper, nickel, PGE exploration asset, and we're right there. But except we have it to get put together in an actual resource. And with those high grade ballrooms, if we could expand a few more, it's only looking better. But further to that is the potential for scale, as demonstrated in that first step out hole at the escape down plunge. That could add, a couple, 3 million tons to this resource, maybe even more. Which then, if you're looking at the mill option, makes that even more attractive as a regional producer. Our team, we have a small team, but poised to execute on this project. Timing, the PGE market is taking off, getting a lot of attention, getting a lot of eyes on the project, and that's only going to help with the potential for JV partners. And then I mentioned briefly, we believe there's an opportunity here regionally to be a regional PGE producer, and it's shown by the amount of activity that's actually increased in the region with junior explorers taking in more interest in PGEs in northwestern Ontario. Now we'll open up the questions, and I believe Mia's on the call, but there's Mia's contact information if anyone wants to reach out to us.
Great. Thank you, Mike, for the great presentation. It's a great time to be exposed to platinum and palladium. There are a few questions in the chat, as well as some that were submitted in advance upon registration. Given the dramatic improvement in project economics from a 39% pre-tax IRR in the PEA to 100% at current spot prices, what's your timeline for moving from the PEA to a feasibility study? And are you accelerating development plans given these exceptional market conditions?
Yeah, so ultimately, we do want to move as quickly as possible. If we had unlimited resources in terms of money, we would move extremely fast. But we do have to be prudent. We want to advance the project and that next phase of study in a quickly as possible, but we want to be prudent. We're worried about dilution. So we need to raise a bit of money, get that study done, prove that this asset is as good as we say it is, and back up what the PEA saying. And then ultimately, a company of our size, we'd like to advance this. And with the provincial government, federal government, First Nations participation, there is an interest in the opportunity to move this forward. I think we'd also should not discount the possibility of having someone else come in and help us with that on a joint venture basis, as an example.
No, for sure. Staying with the PEA, it indicated you could be in ore within 7 months using ramp access. What are the critical path items that could impact your timeline to first production?
So certainly on a toll milling case, the permitting is relatively simple. We still need to do, we're not going to develop a mine on a PEA. That's just irresponsible. So we need to do the next phase of study and get some permitting out there. If you look at my timeline, we had a big part of that is working with the First Nations, looking at their interest in participating and what does that look like. Certainly having them as partners on this project would one, make the project stronger, but two, would actually, working with First Nations make projects go faster. And these communities are really interested in working with us. So to answer the question, on a toll milling case, we could probably be, get through a study and permitting, and you could be driving that ramp. And it's kind of what I had in the timeline. starting in 2027. And if there's no other infrastructure build, you're just shipping you're shipping the ore off site, in 2028. But if we're building a mill, it's you can imagine the permitting's a lot more involved, a lot more design work and permitting, and we'd have a tailings facility, so things do get more complicated, and I would expect we could easily add a year onto that.
Excuse me. Thank you for that. You mentioned developing a parallel path with a standalone mill case for toll milling opportunities. Can you elaborate on the economics of the toll milling option versus building your own processing facility?
Yeah, so clearly, the toll milling. One of the advantage of toll milling is lower capital, right? And you see, we have under 100 million capital. That a lot of it's driven by underground development. If we're looking at a mill, and again, this is a massive forward-looking statement, and off the top of my head, with a mill, it's by no means one of these big. I get challenged all the time by these big, large gold mills that people build. This is a 2,500 ton a day, crush grind float mill. So with the mill and tailings, round number 200 million, let's say 170 to 200 million. So add that on, but with some improved prices, not improved from today. We don't need today's prices, with having our own mill, we would redo the mine plan and take in some lower grade material, because with our own mill, our operating costs should go down, and so we'd have the opportunity to take on that material. So if we're sitting here today at we'll call it pre-tax 700 million, could the mill pull in pre-tax 500? It could be in that range, but that's a pretty big forward-looking statement. But those are just numbers off the top of my head.
No, for sure. Let's pivot to exploration potential. The first 400-meter step-out hole at the escape down plunge showed promising results with 2.5 kilometers of strike length, still largely unexplored. How significantly could the resource base expand, and what would that mean for the overall project scale and mine life?
Yeah, I guess just using geometry and on what we see in the other part of the escape. Yeah, I think 3 million tons at resource grade are within the realm of possibility. That would take time, and I don't want to sugarcoat things, right? It's we're looking at 600-700 meters holes across that. So that would take a lot of money to get that even to an inferred category. For our perspective, I mean, priority is project development. If we could get hit on a few more holes, do some geophysics, show some larger targets, that would be exciting. The reality is how these deposits are set up. They're really set up for what we'd call reserve replacement. So if we're actively mining these and you're continuing to ramp down and drilling these areas as you're mining, if we're mining 1 million tons a year, the idea would be we would be replacing that 1 million tons a year in the resource as we go down plunge. That's the real opportunity with respect to these two assets, both the current and escape. But I think the escape, if we can demonstrate those scale and those different targets hold together without getting it necessarily into an inferred category, that level of scale could attract somebody else into the story here.
From the chat here, Ken is saying, from the presentation, you mentioned going for an exploration permit in 2026. Can you please expand, i.e., what exploration activities are you currently approved for, and what exploration activities are you looking for? Thank you.
Yeah. So for early exploration, we're doing it for some of the permitting is advanced exploration. So that would allow us to drive a ramp and take a bolt sample. Now, taking a step back and looking at early exploration, drilling activities, we have the permits in place for any work we want to do on the areas of interest we have, and we do have one permit that expires in November that we're working on putting the plan together to get that expiration permit renewed, and that one would allow us. I think it covers the current deposit, so that one we get that renewed in November, so it would allow us to do any work in and around the current deposit. But I believe the escape deposit permit is still good for another couple of years.
Great. Neil's wondering in the chat, how deep does the vein run?
We don't know. So it's intrusions from depth. And so I think on the current side, we probably hit it at 700 meters deep because there's shallow dipping. And then right now we've hit it, we hit it on the escape this past fall, and it bottomed out at 550, 600 meters in that range. So yeah, I guess, it comes from depth is the thought. So yeah, I hope
for sure.
Your guess is as good as mine.
Mm-hmm. You've mentioned outreach to multiple federal and provincial funding agencies for critical minerals. What level of government support are you anticipating, and how does this fit your overall financing strategy to moving the project forward?
Yeah, so right now, look, I think I've said before, Ontario and Canada have done a lot to try and advance projects and provide funding. There's not a lot of funding for where we're at right now. We've met extensively with different parts, just trying to find out and put together a roadmap of all the potential funding as this project develops. So we need to get this project to the next phase of study at the very least. And certainly there is money available, but if you look at like the Generation Minings of the world, that do get commitments from Export Development Canada or through the feds for the Critical Minerals Infrastructure Fund. It's kind of last money in, so you need to, the money's there. You gotta actually still put something together that's bankable and attract investment. But they'll come in with the money, and particularly, again, I'll go back to having First Nation partners that are potentially interested in participation. That would make a big difference as well.
Staying with the financing topic, with 1.1 million in cash roughly, how will you be looking to finance this work for 2026? And another question upon registration here: how close are talks with partners or JVs?
So I'll answer the second one first. Is I guess ongoing. We're still on the search, and if there was anything material, we'd be putting out a press release. But yeah, we've some interested parties we've had lots of discussions with, but I guess nothing to report. And then for funding for work this year, yeah, we are currently looking at what we want to do for a raise. In early this year to get going on some of this study work, the MET testing, the technical study, permitting. We do have to do a raise coming up in the early part of this year.
That's it for questions here, Mike. So thank you for the presentation, and thank you everyone that joined us today live and submitted questions. If you came in a little late, the recording will be available shortly, so keep an eye out for that if you missed the beginning part of the presentation. But I'll pass it over to you, Mike, for any final closing remarks before we close things off here.
Yeah, I just encourage people to pay attention to the platinum market and encourage people to take a look out there at other platinum, palladium, copper projects, and then come back and look in comparison to what we have at the Thunder Bay North in terms of our volume, the size of the resource and the grades, and our relatively close ability to move this project forward. We're right on the cusp. So yeah, pay attention to the market and feel free to reach out if anyone has any questions. We're always open to talk.